context, okay, President Trump, gets elected, you would think that the price of gold should rise, as the price of Bitcoin did. And that was on a rumor that Trump is going to be pro-Bitcoin, whatever that means for a president to be pro something or anti something. Anyway, I don't know, but Bitcoin is now making records, and gold corrected a bit. So I don't think that makes any sense. And I think 4 years from now, we're going to look back at this and say, wait, what was, if you looked at the gold price chart, I don't think you're going to be able to point to the election. I don't think it changes the trajectory. I think the gold market's moving for all sorts of reasons that are much bigger than who happens to be in the Oval Office.
You're watching Capital Cause. My name is Danny, and today's guest is the returning Keith Weiner. Keith, thank you so much for coming back on.
Thanks for having me.
It's always a pleasure. Let's just dive right in, Keith. What is on your mind right now? What is top of radar for you as it relates to the economy, the world, the markets? What's on your radar screen?
Falling interest rates.
All right. Let her rip.
I think I've been kind of a lone voice in the wilderness saying for a long time, this Fed rate hiking attempt is going to be aborted. Inevitably, necessarily, inexorably. It's plate tectonics. Rates are going down, not up. Everyone said, Keith, you're an idiot. Inflation expectations, this, that, the other thing. And now today, the Fed cut another 25 basis points. I just posted, sometimes I have this habit of being sardonic in my posts. And I said, today, the Fed abruptly decided that the right rate is 25 basis points lower than what the right rate was yesterday. And this has nothing to do with politics. Nothing to see here. Move along, folks. And just the idea that we have any price in the economy, let alone the most important price in the economy, is administered by a Gosplan, a bureau of some sort.
Yeah, not just the world economy.
That's right. The whole rest of the world. When the U.S.
They wait on us.
When the U.S. Sneezes, the rest of the world gets a cold, as they say. And anyway, the rate's coming back down. Of course, President-elect Trump wants it to come down. It's hard to think of who if anybody would actually fight for rates to stay higher, because everyone wants higher stock prices, higher housing prices. They want the bull market to be back on, which they mistake for a healthy economy, which it isn't. It's a Keynesian stimulated boom. But as long as it lasts, it's a lot of fun. It's an orgy of break out the seed corn and let's party. And, nobody thinks about what are you going to do when the seed corn runs out. Or worse yet, these things have lags of a long, even the proponents admit the lags are years or decades. The problem with eating the seed corn, if you're literally eating the seed corn, is that, let's say you eat that over the winter. Next spring, there's plenty of things to eat. The problem is you can't plant a crop if you really ate all the seed corn. It's next winter. There's a 12-month lag.
Yeah.
And then you starve. And so no real farmer would be willing to do that under.
Yeah, but Keith, they've been doing this stuff for decades now. Like, when is the day of reckoning going to arrive?
If you'd asked me that in 2012, I would have said and did say. So I made a boo-boo. I said 5 to 7 years from 2012. So obviously 2019 came and went. The world still held together, seemingly, although more and more is busting at the seams. All I can do is I can hide behind Adam Smith's comment that there's a great deal of ruin in a nation. They impose ruinous policies. Why is there not ruin immediately? Well, America, was and still is, I guess, the wealthiest country that the world had ever seen. It takes a long time to dissipate all that wealth. And of course, the entrepreneurs are still at it creating more. And so there's a race condition between entrepreneurs creating more wealth and monetary policy consuming it. Monetary policy is, of course, growing exponentially, so it'll win in the end, necessarily. But, in the meantime, it's great fun. But on the other hand, look at gold at, $2,700. And, I don't know if it's going to correct further. I know some gold experts here who think, it's peaked for this year and the real run up is going to be next year. And now it's going to come down for the rest of the year. I'm not so sure about that. this market is trading very differently
Hmm.
from, we'll call it the long bear market of, second half of 20 or, September 2011 through, 2019. This market trades differently. That market, that whole time, every time the price would blip, and I almost got sick and tired of writing these articles because the whole gold press would say, that's it. This is the blast off. And, the bull market's back on. I'd look at the data. I'm like, not going to happen. And I'd quote Aragorn, the day will come when gold is, $3,000. But today is not that day. I just got sort of tired of saying that. I'm sure everyone got tired of me saying that. But you can see it in the data that when the price would blip, the basis would rise. And the basis is essentially the future price minus the spot price. So if that's rising when the price is rising, that tells you that the price is being pulled up by bidding in the futures market. And now who's buying futures? The speculators. What are they doing? They're betting on the price is going to go up. Well, if that's the only thing going on, that they're the ones driving the price up, they're front running only themselves. Eventually they're all in. And by its nature, futures traders are a short-term position because there's a cost to hold it and they're using leverage. And so if it moves against you, you can get wiped out. So that's not going to be a durable, move. But this market, when the price goes up, the basis isn't necessarily rising, which means it's physical metal is being bought. And
Interesting.
people who buy physical metal, generally unleveraged, generally tucking it away. It's not coming back to be sold necessarily so quickly the way, if somebody buys a future, they can do that on 20 to 1 leverage. I don't know that most people use that much leverage, but I'm sure the average person is using 5 or 10 to 1. Um, that has to get sold fairly quickly, and it did. So this market's trading differently. Will there be a correction to 2,600, 2,500, 24? I can't sit here and say, I guarantee you, it's not going to happen. But it seems less likely. And the whole world is buying gold for all sorts of reasons that are good ones. Unlike 2011 to, I'm sorry, 2009 to 2011 was the reflation fear. You had prominent gold bugs saying there's imminent hyperinflation. You had all these things. Oh my God, quantitative easing. We never heard of that before. Oh my God, all this money printing. We're going to have massive, massive inflation. Buy gold as a hedge. And they were buying gold, but for reasons that weren't really true. And of course, the price of commodities and everything went up for a bit, and then really were crashing from 2011 to 2014. Different commodities finally peaked and crashed. Oil was the last one, as I recall, in 2014 crashed. Look at the price of oil today. It's less than half what it was in 2008. So the whole reflation concept was wrong, as it turned out. And all the people who bought gold based on that fear, when they realized they were wrong, well, a lot of them sold, right? So then the gold price went back down, but not as low as it had been, previously. And anyways, we're in a different market now. And I'm in Dubai at the moment. Here in Dubai, the sentiment is quite different than in the Western world, where the coin, the bullion dealers in the U.S. and Canada and the U.K., even Europe and even in Germany, you know, buying is kind of moribund. There's some sell. I don't think there's massive amounts of selling, but there's some selling, and there isn't really much buying. But in this part of the world, there is buying, and it's not because we think consumer prices are going to rise. It's because they don't like, in the Arab world, they don't like the dollar and monetary policy. India, it's really an anti-rupee trade. In China, it's an anti-yuan trade. In Turkey, it's an anti-lira trade. Ironically, right, all the gold bugs on Twitter saying that, oh yeah, the dollar's being repudiated. And in three of the four, major gold markets, three of the four of them, they're buying gold as a way of escaping their own currencies. They buy dollars too, but then they buy a certain amount of gold. And central banks in this part of the world, they're buying gold. There's rumors about Iran. There's rumors about Saudi. Um, we'll see what data comes out in years to come. But it's an interesting market. And so monetary metals, we calculate what we call the monetary metals fundamental price of gold and silver, um, which essentially what we're trying to do is ask the question, if you backed out the action of those leverage speculators, because they're using leverage, they can temporarily displace the price, push it either up or down. What if you could back out, and we have our, magic formula for how we do that, to try to back out the impact of the speculators on the price? Where is neutral buoyancy? Where would it clear without the speculators? And in gold, that price right now is just a hair under $3,000,
Wow.
right? So it doesn't mean gold has to be $3,000 ever. It certainly doesn't mean it has to be that by tomorrow morning. But it tells you there's a tension in the market. If you think of like two, I like to use the analogy of two steel posts and a rubber band under a certain amount of tension. And, if someone is pushing down on that rubber band, the rubber band will be a V shape. And when you let it go, it's going to snap back. Or sometimes the market can be pushing it up. Right now, it's kind of pushing it down. And the flat point, the neutral point, is, quite a bit higher, $300 higher from where it is. Is that going to happen tomorrow? Are these other people going to be right? Well, gold price continue to correct this year and then have a $3,000 plus move in 2025. You know, what did Yogi Berra say? Predictions are hard, especially about the future, especially if you want timing involved in it. That's really hard. So I make no attempt to predict timing of this, but I can just say there's tension, and the tension is, pushing upwards. Silver, much less so.
Mm.
3350
How
is kind of the
much?
neutral. 3350 is the neutral point, or what we call the monetary metals fundamental price.
Yeah, and we've
It's
already
a
hit
bit
that
above the
point.
market, but it's not anywhere near what gold is.
Right. Well, why is that? Why is there more of a attention on gold?
Um, I mean, if you go with and I know people that absolutely, serious people that are absolutely convinced that the reason why the gold price has been moving all year has been central bank buying. And central banks, as everyone knows, and it's a cliche, but it's true, don't buy silver, they buy gold.
Hmm.
So if the whole thing is driven by central banks, well, that would explain
There
why
you go.
silver isn't affected. My personal take, first of all, I don't think the central banks, when you look at the quantities involved, and they're announcing a few hundred tons here and a few hundred tons there, I think the gold market is so much vastly, vastly bigger than that. I don't think that's enough to explain, essentially $1,000 move in a year.
Hmm.
Um,
Yeah, yeah.
so
Because what's the market cap on gold? Isn't it like $18 trillion or something like that?
yeah, there's, according to the World Gold Council, what is it? It's 200 and something thousand. I had John Reed of the World Gold Council on my podcast, I think a couple of years ago, and I think I said 200,000. He corrected me. He said 206,000. I said, okay. Um, I think personally, I believe that the actual amount of gold that's out there is massively higher than that, multiples higher than that. Because the problem is you can't inventory gold. And you can't, people have been hiding it from their governments and from their nosy neighbors for 6,500 years, as far as we know. There's no way to stock take. There's no way to inventory it. Nobody trusts their government. Nobody trusts their neighbors. People are extremely secretive about it. Um, I'll share two anecdotes about this. One is I gave a talk in front of a gold prospecting club where it was hundreds of people in the room. It was a big club. And they go up in their hills and look for gold. And I know they find it because they gave away three little nuggets to three members that did something to help the club. And one guy wrote something for the newsletter. One guy was welcoming, newcomers. The third guy did something else. And each of them got a little, I don't know what that nugget weighed, a couple of grams probably. Um, so I stood up, and the first thing I said was, how many of you own gold? Some amount of gold, any amount of gold, raise your hand. And I kept kind of begging for anybody to raise their hand. Not a single hand goes up in a room of like 300 people. I said, thanks for proving my point. You can't inventory it. You can't stock take it. There was no official estimate that makes any sense. And I said, I know that obviously you guys go up in their hills and you find gold, and some of you got it. And I know that some of you have gold because I just saw three people get a little nugget of gold and tuck it in their jacket pocket. Don't give me this crap. At least those three people should have raised their hand. I've got 2 grams right here. It's in my jacket pocket. Nobody would fess up to it. Um, Another anecdote was I was in this guy's office, who's in the gold trade, and they were kind of a small um, hub or collection point for the cash for gold, guys. And they also got some dental stuff, and they got some stuff from crematoriums. When bodies would be cremated, there'd always be a little lump that had some precious metals in it. And so they would melt it. When you melt it, the slag floats at the top. So you scrape that off and you stir it. So what you have is a homogeneous bar of metal, which is not pure gold. It has silver in it, it has copper, it has maybe palladium, platinum, whatever is in it. And then they would aggregate enough of that, and then they'd sell that to an LBMA refiner. And anyway, that was the business. So I'm sitting in his office talking, and there's a safe in the corner, and it's the size of one of those sort of somebody in a college dorm. It was a bigger than one of those cube fridges. It was like a cube fridge plus a half height extra, or like a kegerator, maybe kind of size. And it's just sitting in the corner, and of course I notice it, and of course I don't say anything. It's not appropriate. And I'm telling him about, people keep the gold secret and keep it safe. And I said, for thousands of years, they didn't even tell their own kids until the old man's on his deathbed and he says, bring my eldest to me. And with his last breath, he's like, there's gold, hidden under the stove, and he passes away. And then the guy just busts out laughing. And he says, you see that safe over there? And I said, yeah. And he said, my kid don't know about it. But there's a lot of gold in there. And he looks at me over his bifocals. I mean, a lot of gold in that safe. I don't know what a lot means to him. I mean, he's in the business, so I assume that doesn't mean, a little stack, a little sleeve of 20 gold eagles or something. I assume it's a hell of a lot more than that. If the safe was packed solid, that could probably be 2 tons worth of gold if it was just stacked wall to wall with gold bars. I'm sure it wasn't 2 tons. Was it 1 ton? Was it half a ton? Was it 100? I have no idea what it was. He didn't open. I didn't ask. But, he laughed at my story and he's like, yeah, exactly. I'm the old man who's, he was probably 60, is not telling my kid, and I'm not going to tell him until he needs to know, which is when I pass away. And so that was exactly, that gold is off the record. Nobody can really inventory that. Anyway, so the actual amount of gold out there and the actual gold market cap is probably a hell of a lot more than whatever, 16, 17, 18 trillion dollars based on today's price times 200 and whatever, 15,000 tons or whatever it is. I'm sure it's a lot more than that. And so I don't think the central bank buying can explain that too much.
Hmm.
And not even necessarily, okay, when the central banks buy, you get sympathetic buying, other people buy. Because like, oh, the central banks must know something we don't, which I would really question the wisdom of that, because the gold people are certainly ready, willing, and able to laugh at the central banks most of the time. And
Hmm.
rightfully so, because the central banks are, either idiotic or disingenuous in most of the things they say. But you get some sympathetic buying. But I think other people are buying, a lot of other people are buying for other reasons, not just because the central banks are buying. So I think it's broader than that, which is good because it was just central bank buying. It could end as abruptly as it started, and then, the price could, drop a lot, which isn't particularly good for
If it's not
anyone.
the central banks, I mean, who else could move a $15 trillion market cap asset like gold, pretty much almost 50% in the last year? I mean, that's a pretty
The thing,
that takes a lot of capital.
gold is unique amongst all the commodities. I mean, let's compare it to crude oil, which is in a way, the next comparison of those, not really comparison. Who can actually take delivery of crude oil? I mean, do you have a tank in your backyard that could actually take any meaningful quantity of crude, crude, not heating oil? I
Yeah,
don't know if
yeah.
you heat your house with oil anymore or not, but you have to be kind of a specialist who deals in it. I mean, it's toxic, it's regulated. If it's exposed to oxygen, it oxidizes, exposed to sunlight, it breaks down. Um, it's volatile, it's obviously highly flammable, it has all kinds of problems. And once it touches something, I mean, that container is forever contaminated. You can never use it for anything other than, basically crude oil after that. Um, Gold is the one commodity that everybody can quote unquote deal in. And if you go to Turkey and people there, that I trust say that pretty much everybody in Turkey would have at least 10 grams of gold. And the average person would have more. And if you have any money at all, it'll be a lot more than that. You go to India and everybody is gaga for gold. I mean, now you're talking between India and Turkey, um, what, 1.5 billion people? Everybody in
Right.
China is desperately trying to dump the yuan and get dollars to get gold, and that's 1 billion people. Yeah, it takes a lot of capital to move it, but there's a lot of capital.
Hmm.
And then, the Arab world's not that small either. Um, and you have these four major worlds that are buying. And yeah, that has moved the price. And central banks too. It's not that they're not buying, but I just don't think they can solely on their own explain the price move. I think it's broader than that.
Yeah, and also silver's going to get some love from a certain central bank in the form of Russia. Russia recently announced that they'll be starting up their silver reserve as well. So what does that mean for silver?
It'll be interesting to see if they want to accumulate, meaningful quantities of it. I mean, the silver market's a hell of a lot smaller than the gold market, so it wouldn't take as much to move it. Right now, we're not seeing that in the data. As I said, the fundamental price for silver is a bit above the market, but there's not that much tension on that rubber band. So, but I mean, that rubber band wouldn't show an announcement. I mean, if they're
Right.
actually buying, you'd see that. Uh, if they announce it, unless enough people want to, stockpile silver ahead of that to front run it. But so far that's not been the case.
Yeah, the recent sell-off in the precious metals occurred after the election, almost as if it was a bet against gold and silver because of an incoming Trump administration. How much stock do you put into that narrative? Will a Trump admin be bearish for gold and silver?
I think overall an election is noise that when you look over, let's say, a period of years or decades and you look at the price chart, you
Right.
couldn't even point to where the election was. It's in the noise. But of course, the day of the election, right, the price of silver dropped, was it 5%? And gold was 2 point something percent. That's a big deal. That's a calamity. Anybody betting on leverage, obviously getting wiped out, stops getting hit, all that stuff happening. And ironically, right, so Trump has said he wants a lower dollar in order to boost exports. So, and he said he wants lower interest rates. So I just noticed today, and here's my rant of the day. Some reporter, I was just on the treadmill and the TV was silent, but apparently some reporter asked Fed Chairman Powell, what's he going to do if Trump asks him to leave? And he said, I'm not going to leave. I just
Yeah.
thought, what a stupid question. And if I was the Fed chair, which I never, never, never want to be, if I was the Fed chair and somebody asked me that question, I'd be like, to the reporter, I'd be like, well, what would you do if the president called for you to resign? I mean, it's a stupid question. Next. Anyway, apparently he said he's not going to step down if Trump wants him to resign, which I don't understand the backroom politics that go on. I'm sure the president has a lot of levers he can pull if he really wants to eject somebody like that. I'm sure
Yeah. But for
he
those who may
can.
not know, the Fed is an independent institution. It's not consolidated under the Treasury or anything like that.
Yeah, but it's political and there's murky things and behind the
Mm,
scenes, I'm sure there's all kinds of levers. But anyways, Trump wants lower interest rates. Powell is already on a lower interest rate trend anyways, which he's been doing for quite some time, long before he would have any knowledge or confidence that Trump was going to win. He's been doing this I mean, they were messaging it. I want to say it was last spring they started messaging it, and then the move was actually later than that a little bit, but. Um, So, lower interest rates, a Fed who says he wants to devalue the dollar. How much power does the president have to do that is, a whole different question. But anyway, you would think those two things would suggest, okay, President Trump, gets elected. You would think that the price of gold should rise, as the price of Bitcoin did. And that was on a rumor that Trump is going to be pro Bitcoin, whatever that means for a president to be pro something or anti something. Anyway, I don't know. But, Bitcoin is now making records and gold corrected a bit. So I don't think that makes any sense. And I think 4 years from now, we're going to look back at this and say, wait, what was, if you looked at the gold price chart, I don't think you're going to be able to point to the election. I don't think it changes the trajectory. I think the gold market's moving for all sorts of reasons that are much bigger than who happens to be in the Oval Office. And the trend is, I don't want to say irreversible, but the market's much bigger than the Fed or the
yeah.
presidency.
What about the trend on the long end of the yield curve, the 10 year? The 10 years going up unrelentingly, despite these rate cuts. So what do you make of that?
Well, it did a little bit today. I think the 10-year was down in rate. I think it's going to come down because I think
Mm,
that um, other than the government as a forced borrower, there's no corporate for-profit borrower that can build a business case to borrow at these interest rates to build productive capacity and make a profit doing so. So all the macroeconomists have their favorite macro equations, MV equals PQ. I threw my hat in the ring a couple of years ago, and my marketing team dubbed it Keith Weiner's macro equation, which is R is greater than I. The rate of return on capital must be greater than the cost of capital or the interest rate. And what we do know, I haven't seen an update of the zombie chart for in a couple of years. What we do know is that before rate hikes, 20% of all corporate debt outstanding was zombie issuers, meaning profits are less than interest expense. It means they can't even afford, forget repaying the debt principal. They can't even afford to service it
Mm.
without borrowing more to make the payments. 20%. And this is before hikes was zombie. Now you push the interest rate from 0 to 5.5, which means the corp and the spread that junk to treasuries widened a bit, not nearly as much as I would have thought. But so the cost for those guys to borrow would have gone from 3% to 8.5 or something like that, or 9. Um, how many more that hadn't been zombies when rates were 0 were zombified or rendered zombie when you move the margin that far? It's like hiking minimum wage. Let's suppose you made a $50 minimum wage. That doesn't mean everyone gets paid 50. It means everyone whose work is worth less than 50 is rendered unemployable. You hike interest rates to 5.5. It doesn't mean everyone's return on capital goes up. It means everyone with return on capital less than that is now submarginal or zombie. Um, how much, so we don't know that, but we do know, I just saw a statistic recently, 47% of the Russell 2000. So the S&P is the 500 biggest companies. The Russell 2000 is the next 2000, not including the 500
Right.
biggest. 47% of the Russell 2000 are losing money. And, it's interest rates, a big, big part of that because we just hiked one of their, major expenses at the margin. So, but in terms, so forget policy and how the Fed was going to respond to that, which is one thing. Obviously, the Fed doesn't want to see 47% of the Russell 2000. They don't want to see the Russell 2000 become the Russell, whatever that is, 1053. They don't want to see that happen. But aside from that, who is bidding up the interest rate on the long end? There's nobody other than, the government itself. So I think speculators are having their day with it, but at the end of the day, the trend is down, and that is going to break down with a vengeance. Can't tell you when. Same thing with gold being 3,000. Can't tell you when. There's no timing indicators. My gut tells me that sooner rather than later. We'll see, but the macro trend of falling interest rates is 4 decades and counting.
Mm-hmm.
And, Powell's abortive rate hikes isn't going to change that. We had a low on the 10-year of 65 basis points in summer of 2020. And I think we'll revisit and, we'll get under that low. How long that's going to take, I don't know, but that's the trend. And
Yeah.
it's only on the downtick in interest rates that you see fresh demand for credit. That's the real indicator. And by the way, the same thing is true on the consumer side. Let's say you take cars. How many car companies are still advertising 0% for 72 months? I'm here in Dubai, and Dubai is booming in a way that I don't think the US is. There's a lot more activity here. People are moving here. It's crazy. Um,
Why
there's
is that?
billboard.
What's the difference?
Well, I mean, 0% income tax, for starters, for individuals. They had for the longest time 0% corporate tax. It's now 9%. So a
Mm.
much lower tax rate regime. Um, in a way, regulation is friendlier. In a way, it's a lot, there's some regulations more onerous here than in the US, but some of it is a lot more easy to deal with, um, and particularly Europeans, as Europe seems hell bent on just committing suicide. All the people that have any gumption are just fleeing and coming here. And, capital has come here. This is the place to open family offices, and everyone's doing that. Every major hedge fund has opened or is opening offices here, either in Abu Dhabi Global Market ADGM or DIFC, Dubai International Financial Center. So, population is growing here, business is booming here, a lot of people here, everybody's making money here. And massive billboards on the side of the highway for cars, 0%, interest rates. And it's like, why is that subsidy necessary? And in this world where the Fed is, the Fed funds rate, well, they just cut it 25 bips, but Fed funds rate was near 5%. Why in that world? So the cost to a car maker would be 7.5, 8. Why would they be borrowing money at 7.5% to give it away at 0%, plus administrative costs, plus the risk, credit risk? Why would they be doing that? Because the demand for cars without the subsidized interest rate is what? Far, far lower than anybody wants to contemplate.
Yeah.
So the losses they take on providing the subsidized finance are less than the losses they would take if they had to find out what organic demand really was. And the same thing is true, in every other area of the economy. So rates are coming down. Yes, what's on my mind? That's on my mind. And now we have a president who's openly calling for lower interest rates. So that just adds to the pressure.
Hey guys, quick pause. I won't take too much of your time, but if you're looking to add into your gold and silver stack, please consider Miles Franklin. More specifically, email them, info@milesfranklin.com, and tell them that Capital Cosmos sent you in the subject line to unlock special pricing that you won't find on the website. In the unlikely event that you don't like the prices, you could always not buy. There's no commitment necessary, but I do recommend Miles Franklin for a number of reasons. The customer support is top notch, the prices are great, and I know the people there. Great people all around. So with all that said, let's get back to the video. Thanks, guys. Yeah. What else? What else can we expect from a second Trump admin? We have heard about the tariff stuff. He did talk about. He did mention in passing that he would be open to cutting the income tax in totality. How much of that could he actually do, though?
I'm not an expert on, well, two things I'm not an expert on. One is the politics of how this is going to play. I mean, I can see the same thing everyone else can see, which is he's got both the House and the Senate, of his party. So presumably he's got 2 years of a nearly free reign. The other thing I'm not an expert on, and there are people who know this intimately, is constitutionally how much tax policy can the president change by executive order versus how much has to go through Congress.
Mm-hmm.
Generally, I'm a fan of what I would call the institutions of governance. That was the brilliance of the founders. I mean, yes, they set up with a good constitution and good laws, but a big part of it is the institutions of governance. I'm a big fan of, if something's right, take it to the legislature and duly enact the bill and then have the president sign it, rather than the president just issuing an edict, an executive order. So, but I can't tell you what tax policy changes he could do. Like he's talked about, the U.S. is the only major country, there's Eritrea, also does this, that the citizens of the U.S. are taxed no matter where in the world they live, no matter where in the world they make their money. You have to file with the IRS. That's not true for citizens of any other country. And of course, Eritrea has the government doesn't have a long arm. I mean, if an Eritrean citizen were in Dubai making money, it's not like the government of Eritrea would even know or have any recourse. But the U.S. government has a long arm, and they will get you. Tax evasion is a foolish thing. They'll catch you at an airport somewhere. You're done. So he has said that he's going to look at changing it so that if you're outside the U.S., you don't have to pay taxes, and normalize it with what the rest of the world does. If that's true, that would be a fantastic boom for 9 million Americans that are living abroad. In some cases, I think some of them don't even know they have an obligation. So I know somebody who was born, he's Turkish, and his parents are Turkish, but father was on a work assignment in the United States when he was born. He was born on U.S. soil. Therefore, he has a U.S. passport, which is very useful to him because if you're traveling on a Turkish passport, you get to stand in the line labeled other and wait 3 hours and pay a $250 fee and have somebody ask very intrusive questions. You have a U.S. passport, go to the e-gates. You're allowed in. But with that comes a lifelong obligation to pay income tax. Even though I don't think he has any particular plans to move to the U.S., live in the U.S., or do anything else in the U.S. But so there's a lot of people like that that'll be impacted by that. And I think that would be great. But is that really going to happen? I don't know.
What
You
about the
know,
corporate tax cuts that he's proposed all the way down to 15%? Would that bring down prices as well due to
so tariffs directly impact the
the
price of.
corporate tax cuts?
I know, I'm saying, but to
Okay.
compare and contrast tariffs versus corporate tax, the tariffs are directly, passed right through to the consumer. And so if you add tariffs, that is definitely going to add to the price of everything. And of course, the domestic company now has a higher bar, to get under, so they can raise their prices too, which is the whole point. But corporate taxes, corporate taxes paid on the corporate income, not on a per unit basis. So generally, no. I mean, if your income tax goes up, it doesn't mean you go to your boss and get a raise. If the cost of living goes up, you and all your coworkers go and say, "We need a raise." I mean, even then, that's a struggle, but at least you got a case, or you have clout anyway. I'm in a case. Um, so if you're taxing corporations and you're sucking the income out of them, so there's less for the shareholders, they can't generally increase their prices. No, what happens is you're sucking the capital out, which the first thing that impacts is the growth rate, right? Growth takes capital, and now you're robbing them of capital. So you want to grow the economy slower, you want to add fewer jobs. Well, that's a good way to do it. And then secondly, um, you are uh, incentivizing them to cut corners on all sorts of things. So they cancel corporate training. They
Mm.
cancel if you have the corporation has multiple sites around the world, okay, no more travel to visit intra-site. They do everything they can to try to fight for their, profits at the end of the day. Um, and then thirdly, obviously you're hitting, shareholders, you're making the corporation less attractive, which means it attracts less investment from investors. The higher the tax is on a risky investment, the stronger the incentive is to go to the risk-free investment, which is the treasury bond. So you get all kinds of perverse things, less investment in especially riskier earlier stage companies, the ones that can really grow. You get a cutting of all the things that are soft expenses or soft benefits, like training and interoffice visits and things like that, that you should have and want to have. And you get less growth because you can't finance the growth. So I think ultimately, I think if you're going to have a tax, a corporate tax is one of the worst. It's not it's one of the more harmful taxes. Um, but no, I don't think that directly leads to higher prices.
Okay. But the inverse of that, which would be a corporate tax cut, would be an expansion in corporate costs.
So if they cut the corporate taxes, then corporations feel an easing of their burden. They can hire more, they can do the trainings and the other things if they're inclined to do that kind of
Right.
stuff, and they have capital to grow. So I think a corporate tax cut would be good. Now, the proviso to all of this is that the real problem is the spending. The government is spending trillions with a plural, with an S, more than it takes in revenues. And anything they don't get from us in taxes, they get from us in some other way. And those other ways are less obvious, but perhaps more damaging in the long run. And so just to shift the cost, if you're not going to really cut the cost of government, if you're just going to simply shift it from taxing to borrowing, um, that's, in the grand scheme of things, that isn't necessarily good either. You got to cut the spending. If you cut the spending, then cutting the taxing is easy. But nobody really wants to cut the spending. And are they going to cut entitlements? Probably not. They're going to cut military. No way in hell. They're going to cut Social Security. That's the third rail. You know, and so they're saying they're going to make it more efficient. Just how, I mean, in what's the federal, government's budget right now? I haven't even looked, it's 5 trillion or something like that,
Yeah.
right? Um, and out of that, how are you going to save a couple of $1 trillion by making the entire vast armada of welfare programs and regulatory programs more efficient? There's no way.
Yeah.
And then those things are politically entrenched. The incentives are so perverse. So I happen to know my last company did a lot of sales to the Department of Defense, the military. And I know the story behind the $800 toilet seat. And it wasn't actually waste in the conventional sense, and it wasn't dishonesty. It wasn't like some vendor took the government for a ride. The problem is you have engineers, let's say working in the Air Force, or maybe it could be a private contractor, and they make a spec for a toilet seat, and the toilet seat is 3 millimeters smaller than the standard one you buy at Home Depot. But the engineer doesn't know that. And so, okay, now somebody has to make custom tooling to cast plastic toilet seats of a custom size, right? That's problem number one. Oh, by the way, the Air Force is going to buy, they have 40 aircraft that's going to be over the next 4 years. So they're buying 40 of them, and some company has to make custom tooling and molds for 40. Well, you have to
Right.
amortize all the costs of the tooling over 40 units, $800 a piece. So you have to come along at the presidential level and say, let's make this more efficient. How are you going to do that? Another thing that I saw, and everybody was talking about this story, I didn't see it personally, but everybody I knew was talking about this story. The way the budgeting is done, if you're an agency and you don't spend your budget, right, the next year they reduce your budget by whatever you didn't spend this year. Let's just say nobody who runs an agency with a budget wants to have his budget cut next year. So there's a frantic spending of unspent money, right? So the government's on a fiscal year that ends September 30. So in July and August and September, there was a frenetic spending of things that make no sense. So there's one um, uh, um, I'm trying to remember what agency he was running, but anyway, this guy ran some agency, and it was like every year they repaved his parking lot. And they were joking like there was like 18 inches of asphalt in this parking lot because that was the thing that was easy. You can get that done before the end. You had to spend it before the end of the year. You lost it. So that was the thing. You can call up the pavers and get it done. And so this is a structural problem. And it has to do with the regulations around procurement. It's all well and good to say make it more efficient, but you'd have to revisit how the procurement regulations changed over the last probably 100 years, and then figure out how to peel that back and roll it back. And that's a lot of hard work. It would be a long slog, very political. You can imagine everybody and their uncle will be lined up against you. You'd have to be a masochist. You're going to be this lone warrior wading into, it'll be like one of those Chuck Norris scenes where there's a pool hall full of 27 gangsters, and he walks in, just cool as can be, and picks a fight with a leader. And then what happens? Well, some punk picks up a pool ball and whacks him in the back of the head with it, and he's down. Like it's intractable almost. And even then, I mean, the amount of waste you're getting is not going to be, trillions and trillions anyways. You got to cut the programs out. And I just don't think there's political will to cut welfare or regulation. So, you know,
Yeah, the pain to cut them can't exceed the pain to not cut them. So until
right.
that
And right now,
happens,
right now, no one is feeling any pain to keep them.
yeah,
People worry in the abstract, and but it's a worry for like economists and sound money people and libertarians, but it's an abstract worry. And if you cut it, it would be not abstract. It would be very tangible and very real, and there'd be people
yeah,
screaming in the streets. So, yeah,
yeah.
that's not a
There's still not enough
prediction,
pain out there. Well, hey
right?
Keith, I mean, we've covered pretty much a whole host of things. Anything else you want to talk about before we wrap up?
Um, I sort of as a half-hearted plug for what I'm doing, but and more in the in the spirit of trends and how things are changing. More and more, we're putting gold and silver to productive use, and I think if we can continue scaling this, and right now we're scaling, um, I think this is ultimately how the world. Right? You want to talk about okay, what's the pain and how does this change? Each individual, when they act as a voter, everyone knows what the party line is supposed to be because they were from church and their parents and school and entertainment. It's like we got to regulate businesses, we got to give welfare, we got to do all these things. But when it comes to their own money, and everyone would tell you, oh well, yeah, you have to have a Fed because we have to stimulate the economy and exports and jobs by, we have to debase the currency. Everybody would say that, from the Milton Friedman, conservatives to obviously the Keynesian leftists, the modern monetary people and so on. So everybody would say that, they pay lip service to that. But when it comes to their own money, nobody wants to be the sucker whose money is losing value for the sake of some Friedmanite argument about employment or daylight savings time or whatever. When it comes to their own money, people would choose something else. And as long as gold and silver don't have an interest rate, then you can see why it's profoundly unattractive to a lot of people. But with an interest rate, it's the game changer. And I think that's how the world is going to end up moving to a new monetary system. It's going to be a bottom-up, free market, entrepreneurial driven, whether it's us or somebody, but making that trend. So, with each deal we do and each press release, look for a press release next week from us. Um, More and more gold and silver being put to work, people earning interest on it. And I think that's what's gonna, really drive a change. And then as people are turning to gold and silver, obviously the price of gold and silver go up, but or conversely, the way of looking at it is the price of the dollar, as measured in gold, goes down. And then there's a graceful transition, to gold rather than everybody's all in into the current system until abruptly, suddenly it fails catastrophically. That's what you don't want. The chaos of 476 AD just doesn't, if you think about it, isn't very appealing.
Yeah. Well, where can people find you, Keith?
Monetary-metals.com. And on Twitter, I am at real Keith Weiner, which is KeithWeiner. And I have to spell it out because unfortunately there are, I don't know if you call them trolls or phishing scammers that will take various misspellings of my name and steal my
Yeah.
profile picture and make you think that.
Well, that means that you made it. That means you're a big time star now.
That's right. I'm the big time because I have people that are scamming me. Um,
Yeah, well, we'll have the
but
link down to your Twitter down below as well,
okay, cool.
as well as your website too. So be sure to check it out, guys, if you're interested. Keith, thank you for coming on, and thank you guys for watching. If you enjoyed this content, give us a like, comment down below. Go, Keith, go. If you agreed with what Keith had to say, if you disagreed with anything we talked about today, let me know what it is. I do read the comments, guys, so let me know what you think. Really interested to get your takes here. Subscribe to the channel so we can keep getting more guests like Keith and growing the channel as we progress forward. And check out our Substack, capitalcosm.substack.com. Link to that is down below as well. With all that said, I'll catch you next episode. Bye, guys.